What if the fastest way to get rich in crypto is actually the slowest? That sounds completely backwards. Every day, millions of people search for the next 100x token. They chase breaking news, watch price charts every hour, and jump from trend to trend hoping to find the trade that changes their life. But what if almost all of them are making the same mistake? What if the people who end up with the biggest fortunes aren't the smartest traders, the fastest analysts, or the ones glued to their screens 24 hours a day? What if the biggest winners are the ones doing almost nothing at all? Because hidden beneath the noise of crypto is a surprisingly simple idea. An idea that sounds boring. An idea most people ignore. And yet, it may explain why some investors build extraordinary wealth while others spend years chasing opportunities that never arrive. The question is simple. If someone wanted to become wealthy from crypto over the next decade, what should they actually do? The answer may be far less exciting than you think. But that's exactly why it matters. For years, crypto has been sold as a game of speed. Speed of information. Speed of execution. Speed of getting in before everyone else. The industry is filled with stories of traders turning thousands into millions overnight. Social media amplifies every success story. Every rally creates new heroes. Every bull market creates new experts. And every cycle convinces a fresh generation that wealth is just one trade away. But there is a mystery hiding in plain sight. If short-term trading is the path to wealth, why do so few people actually achieve it? Why do so many traders burn out? Why do so many people who spend years studying charts fail to outperform those who simply bought and held? And perhaps most importantly, why do some of the biggest fortunes in crypto come from people who did the least amount of trading? To answer that question, we need to look beyond price charts and headlines. We need to examine the difference between excitement and conviction. Because the real opportunity may not be where most people are looking. To understand this idea, we need to go back to the early days of Bitcoin. When Bitcoin first appeared, almost nobody believed it would survive. It was dismissed as a curiosity, a hobby, an experiment. Critics predicted it would fail repeatedly. Then came exchange collapses, government concerns, regulatory pressure, market crashes, scandals, and countless moments when people declared that crypto was finished. Yet somehow, the network kept moving forward. Year after year, cycle after cycle. Every time the industry faced a major challenge, Bitcoin survived. Meanwhile, something interesting happened. The people who believed in the long-term vision often outperformed those trying to predict every short-term movement. The market rewarded patience more than activity. But that lesson is difficult to accept. Human psychology pushes us toward action. We feel productive when we trade. We feel informed when we watch charts. We feel in control when we're constantly making decisions. The problem is that markets don't always reward activity. Sometimes they reward conviction. And that distinction changes everything. Because while most investors obsess over what will happen tomorrow, the largest opportunities often come from correctly understanding what will happen 10 years from now. Here is the first major insight. Nobody knows what crypto will do next week. Nobody. Not retail investors. Not influencers. Not analysts. Not even the smartest professionals in the industry. The truth is uncomfortable. Tomorrow's price movement is incredibly difficult to predict. The market can rise unexpectedly. It can crash without warning. It can move sideways for months. Short-term predictions are often little more than educated guesses. But here's where things get interesting. While predicting next week is nearly impossible, predicting long-term trends can sometimes be surprisingly achievable. Think about technology. Few people could accurately predict what a technology stock would do next month. But many people could see that the internet was becoming more important over time. The same pattern appeared with smartphones, cloud computing, artificial intelligence, and now, potentially, digital assets. The real opportunity isn't necessarily predicting every move. It's identifying major trends before society fully understands their impact. That is where conviction begins. And conviction changes the game. But there is a twist that makes this story even more fascinating. Many people working inside the crypto industry don't actually have strong conviction in crypto. At first, that sounds impossible. How can someone build a business around an industry they don't fully believe in? Yet it happens all the time. Some people optimize for careers. Others optimize for status. Some optimize for titles, networking opportunities, or short-term profits. They participate in the industry without embracing the long-term thesis behind it. And that creates a strange situation. You can meet people who spend every day talking about blockchain technology while barely owning any crypto themselves. You can meet industry professionals who publicly discuss innovation but privately remain skeptical about the future. You can even find people building crypto-related businesses while allocating most of their wealth elsewhere. Now think about what that means. If people inside the industry still doubt its future, can we really say the opportunity is fully understood? Because historically, truly mature opportunities are often crowded with believers. Early opportunities are different. Early opportunities are filled with skepticism, even among participants. Especially among participants. And that skepticism may be more important than most investors realize. This leads us to the core idea. The biggest source of potential wealth creation in crypto may not come from superior trading. It may come from recognizing a long-term technological shift before the majority fully appreciates its impact. Think about the average retail investor. They open a chart. They see volatility. They react emotionally. They buy when prices rise. They panic when prices fall. They constantly search for certainty in an uncertain environment. Now compare that to someone focused on a 10-year horizon. Instead of asking what Bitcoin will do tomorrow, they ask a different question. Will digital assets matter more in 10 years than they do today? Will stablecoins be more widely used? Will tokenization become more common? Will blockchain infrastructure become more integrated into the global financial system? Those questions are dramatically different. And importantly, they may be easier to answer. Because long-term adoption trends don't depend on daily market sentiment. They depend on technology, infrastructure, utility, and human behavior. The investor focused on the next 10 days is competing against thousands of professionals. The investor focused on the next 10 years is competing against impatience. And impatience is often a much weaker opponent. But here's where things get even more interesting. Imagine competing against a hedge fund manager. A person with enormous resources, advanced analytics, private research, institutional connections, a team of experts, and decades of experience. Can the average person realistically outtrade that individual? Probably not. The odds are heavily stacked against them. Yet that same hedge fund manager cannot magically accelerate the passage of time. They cannot force adoption to happen faster. They cannot instantly create conviction. Long-term investing operates under a different set of rules. Instead of winning through speed, it wins through patience. And patience remains one of the few advantages available to everyone. This is why some investors describe the greatest alpha as understanding the long-term impact of technology. History repeatedly shows that society tends to underestimate technological change. The internet transformed communication. Smartphones transformed daily life. Artificial intelligence is transforming productivity. And crypto enthusiasts believe blockchain technology may transform parts of finance itself. Whether every prediction becomes reality remains uncertain. But the broader lesson remains powerful. People consistently underestimate how much the world can change over a decade. And they consistently overestimate how much it will change in a week. That imbalance creates opportunity. Of course, no investment thesis is guaranteed. And ignoring risks would be irresponsible. Crypto remains volatile. Markets can experience massive drawdowns. Projects can fail. Regulations can change. Technology can evolve in unexpected ways. Competition can emerge from entirely different directions. There is also the possibility that some expectations simply prove wrong. History is filled with technologies that generated enormous excitement before disappointing investors. Not every innovation changes the world. Not every trend survives. Not every prediction becomes reality. That is why conviction must be supported by research. Belief alone is not enough. Investors must understand what they own and why they own it. Another danger is emotional decision-making. Many people claim to have long-term conviction until volatility arrives. Then fear takes over. A 30% decline feels catastrophic. A 50% decline feels unbearable. And a prolonged bear market causes many investors to abandon their plans entirely. Ironically, those emotional reactions often destroy the very advantages that long-term investing provides. Patience sounds simple. In practice, it can be extremely difficult. Because staying invested during uncertainty requires confidence in a future that cannot be seen. That is the real challenge. Not buying. Not selling. Believing. At the end of the day, the biggest lesson isn't really about crypto. It's about how wealth is often created. Most people spend their lives searching for shortcuts. They search for secrets. For hacks. For hidden opportunities. For the next big trade. But many of the greatest fortunes in history were built through something far less exciting. Patience. The willingness to hold a strong conviction long enough for reality to catch up. Maybe the future of crypto will be larger than most people imagine. Maybe it won't. Time will provide the answer. But one thing is clear. The market will continue rewarding those who can separate noise from signal. Those who understand the difference between speculation and conviction. Those who focus on decades instead of days. Because while everyone else is asking what happens next week, a different group of investors is asking what happens over the next 10 years. And if history has taught us anything, it's that fortunes are rarely built by predicting tomorrow. They're built by correctly understanding where the world is going, and having the patience to wait for it to get there. Sometimes the most powerful strategy sounds almost too simple. Buy. Hold. Wait. And in a world obsessed with excitement, that might be the most underrated advantage of all.